In today's video we are going to observe a good example of the fractal flow strategy in alignment with the market maker strategy. The price action analysis you are about to see took place in the US dollar versus the Swiss franc in the 30-minute timeframe. This is one of those charts where the more you look, the more interesting details you find. Observe that from number 1 to number 4, price makes the usual simple uptrend pattern of higher highs and higher lows. However, the way in which high 4 surpasses high number 2 is not exactly what you would expect from solid buyers. High number 4 only surpasses high number 2 by a few pips. Even though this is technically a confirmed higher high, we have to take into account the fact those buyers from number 3 are not exactly strong. When we deal with market manipulation, we have to be extremely careful about these observations. Even though this is a clear fact in the chart, market makers might use this deceptively to maneuver most of the market. This is exactly what starts to happen after high number 4. The market starts to drive down towards low number 3, which is technically solid, but practically dubious. This is a difficult example because the only clue we have that market makers might use these highs and lows in a deceptive way is the large bearish candle in the middle of the price vector from number 4 to number 5. In the tridimensional axis of market manipulation explained in the market maker strategy, the von Riestorff effect is used to shape the expectations of retail traders in the market. If we unite the von Riestorff effect in the middle of the price vector from number 4 to number 5 with the rather dubious structural power of low number 3, we will have the impression that this market is indeed going south. However, if you are aware of how market makers behave, once candle number 5 appears, a red flag is raised. Number 5 is a fractal candle that pierces the low number 3 marked with the red line. Let's take a moment to analyze this candle individually. Beyond the fact that it is a clear fractal formation, we can also see a large lower tail in that candle, which implies buying pressure after a vain attempt of sellers to drive the market down. The tricky thing is that the interpretation of this candle might have occurred by design, which it often does under the market manipulation mechanics. That lower tail has one purpose for its existence, which is to trigger retail traders to the downside of the market. That creates a burst of liquidity around that area that serves like a door for market makers to enter this market with a large buy position. That's what that lower tail means in this situation. Here you have to remember how unreliable those Japanese candlestick names are. In number 5, the manipulation is pretty much complete, and for the traders who understand this whole idea, it's clear that market makers are willing to bring the market north. Let's take a moment to unpack the meaning of the red and blue horizontal lines you see in this chart. The red line is the representation of the absolute low number 3, and it's labeled as a wash line because it's the precise level where retail traders got maneuvered. The blue line represents the lowest demand frequency in low number 3, which serves to pinpoint the original buyers that produce the vector from number 3 to number 4. These two lines together allow us to create one demand zone that serves to narrow down the space where trades can be taken with an optimal distance from key points in price like low number 3 and low number 5. The final detail in the trade you see in this chart is the black upwards pitchfork that is grounded on the most important highs and lows of this situation we find ourselves in. Low number 3 that has been serving as an axis for the whole trade, the high number 4, which is the origin of the vector that contains the von Riestorff candle, and low number 5, which is the place where everything starts to align in one focal point. The trade you see in the chart was opened in the moment price touched the lowest line of the black pitchfork. Notice how the candle that touched the fork line is also a fractal candle. This is an example of a triple intersection of techniques in alignment with a converging narrative about market makers. The stop loss was placed a few pips below low number 3 and low number 5 for maximum protection in this situation. The take profit will follow the highest line of the pitchfork that comes out of number 4 for a dynamic target. Let's see how price will develop and then we will make final observations about this tricky situation. Notice that the price action analysis under the tridimensional axis of market manipulation was correct. You can only understand certain movements of price if you are aware of this extra layer of interpretation laid out by the theory of market makers. This is one of the dark alleys of price action analysis, and there are many more we can explore. Let me remind you once again that trading effectively over time is not about finding setups. Setups are just triggers that are supposed to make our lives easier, but triggers will not work in an unloaded weapon. The metaphor here is simple. First you have to load the gun, then you aim precisely at the target, and then you pull the trigger. In other words, you identify the narrative of price and then you can think about simple technique to help you trigger trades. In this sense, trading is a lot like hunting. If you wish to learn how to understand price action and overall high-quality trading, please check the Fractal Flow courses in the strategy store available in the video description. If you enjoy these videos, and would like them to continue in the future, please help support the channel by clicking the like button, subscribing to the channel, activating the notifications button so you don't miss new uploads, and by leaving your comment below. Thank you for watching and I hope to see you in the next videos.